Okay, we're officially recording. Today we are sitting down with Jake Donovan, Legacy Mortgage LLC, based out of Hanover primarily, right? That's where your office is and where you'd say you're from. From New London, and somebody I work with, a friend of mine, and we're just really happy to have you on. Thanks for coming in.
Happy to be here. Thanks for having me.
So I wrote some somewhat interrogatory questions for the first few. The first one being, who are you? Why are you here? More on the casual side, I mean, really just like, where are you from and what brought you to, this seat today?
So I was born and raised in New Hampshire, grew up in like the Kearsarge area of New Hampshire. So lived my whole life there, always enjoyed the mountains, the lakes, playing sports, being outside. And so basically, I went to school, college down in Massachusetts, down in the Boston area. And so I realized very quickly that I didn't really like being in the city all that much. So then once COVID hit, my school actually sent us all home a little bit early. So had to come back to New Hampshire and kind of plan out what the next steps were going to be throughout COVID and everything. And that's how I got into mortgage lending. Ended up right back in Hanover.
Did you have a connection in
Yes.
the field or at a local business with Legacy maybe?
So not at Legacy, actually. So I started out at Title Mortgage up in Hanover.
Oh, right. We know Title very well.
Right. So like one of my good friends from high school, his dad was the owner of the company. So one thing led to another, and they were hiring at a time where it was very difficult for me to get a job anywhere else. So I was like, wow, this seems like
Bill Version?
Yeah. Yep. And so they were hiring. I was like, this seems like an industry that's resilient and could be a good job to work in and get started. So I didn't know anything about mortgages or lending or anything like that. And so working at Title was where I met Rob. And so Rob eventually started Legacy and asked me to come along with him. And that's how I ended up at Legacy.
Awesome. Do you mind pulling your mic and tilting it a little bit more like mine so it's a little close? There you go.
Or higher up like that?
It's just sometimes when you're away, it's fading a little bit.
Gotcha.
So then, I mean, you obviously like the work that you're doing because you've been doing it for how many years now?
This is my third year.
Yep, great.
So when I first started out, I was a loan officer assistant, and then gradually, got my license as a loan officer. When I moved over to Legacy to be with Rob, that was one of the huge things, was that he was giving me all this opportunity to be a loan officer and try to start my own book of business and everything. So
great.
That was probably the very beginning of 2021. And I was processing loans, but also trying to originate my own loans through purchases or refinances or whatever. And so in early 2022 was when I went full, basically ditched the salary and went full steam ahead into being a loan officer. So,
yep. Great. And that's a big commitment. I mean, it's very similar to what realtors have to do to look kind of over the edge and say, Here we go. We're out on our own and we're self-sufficient in a way.
Exactly.
And that's gone well for you as a professional. You feel that structure has worked out and you've kind of figured out your way within it?
Absolutely. I love what I do. It's like, it's very similar to you guys. You don't do the same thing 2 days in a row.
No.
We're always doing something different, meeting someone new, meeting new potential clients, or clients who maybe they don't need something from us right now, but we're always kind of planting the seed. And, just kind of the more people that you meet, the more of a chance you have to pull a deal together.
Yeah, no, I mean, I think that's a big part of it. I mean, we're constantly working our sphere.
Right.
I was just sitting out on Main Street after wolfing down a cheeseburger and thinking about who may walk by that I may engage with or just, say hi to, because it happens pretty frequently.
Definitely.
Have you found that you're able to kind of capitalize on your home territory, like your home market around New London where you grew up?
Yeah, I haven't done like a ton of business in New London, I wouldn't say, just because there's a lot of cash deals that go on in New London.
Okay.
But yeah, definitely just kind of getting out there in the community, kind of leaning on a lot of those relationships with people that I grew up with, or friends of the family and things like that. Certainly is an advantage, as opposed to if I just started in a completely different state, didn't know anybody, it would definitely be much more difficult.
Yeah. So what do you do outside of work? What are your personal interests? What kind of keeps you going?
So I definitely, growing up, I played soccer like 24/7. So that was kind of my big passion. I went to college and played in college and stuff. And so it was a really great experience to be able to do that and kind of further my soccer career, if you will.
Sure.
But, you know, now that I'm not playing at any sort of a competitive level anymore, I just kind of try to play pickup soccer, kind of fit that in anywhere that I can. It's great for just staying healthy, staying active.
Yeah. Do you find you're able to find games? Because I know up here I've had incredible difficulty just finding games where like people actually want to play, or you know, they're like a half semblance of a real game.
Right.
There's a lot of hokey, half put together games where you really just are kind of kicking a ball back and forth.
Right. It is a challenge for sure to find something that has some sort of structure, some sort of regularity. I do play in like a 7v7 league that's down in Charlestown.
Oh, fun. So that's more organized.
On Thursday afternoons right now. Like it's just through the summer. It's a not really a formal league or anything, but you know, there's regularity. The games are scheduled at like 6 and 7 o'clock. So
that's fun.
It's been good to get back after it and play some outdoor soccer again.
That's got to be a good contact for business too. I would
Pool of contacts.
Definitely. Yeah, I've met so many people just in the handful of games I've been to so far, and so it's because it's really all ages. There's kids that are still in college that are playing. There's kids that are that are just doing it for exercise throughout the summer. There's some guys who are in their 30s or 40s. Like it's really just like a free for all almost. So it's a lot of fun. Great way to meet people.
And parents is always good. Dale, what about any of your forays into sports? Were you ever was soccer prevalent at all when you were at the age to play sports?
I was more into tennis. We were junior New York State champions, and I was the lowest on the totem pole. I didn't win a lot of matches, but I played every match anyway. But I enjoyed tennis a lot.
That's awesome.
And I did a little bit of football, but I wasn't very successful at that. I wasn't big enough to play football.
Football's got to be tough. I never played football either.
I imagine you also wanted to keep your face intact. Because
I didn't really think about that in those days. But I was thinking about what Jake said about, in the old days when a long time ago, when I went to a banker to get a mortgage, we talked to him briefly, and then we never saw him again. And you guys just go out of your way to help people. It's like what we do.
Yes.
To assist people. It's just not. It's not getting them the dollars and cents. It's helping them with other facets.
Absolutely, we try to make it more of a relationship-based thing where I stay in touch with people from day one through closing, and then even after closing, I'm reaching out saying, hey, if you ever need help setting up your auto pay, or have any questions about the mortgage, or you want to make a lump sum to pay the balance down and stuff. It's like I don't look at it as the relationship's over when it closes. To me, that's kind of when it really begins.
Yeah, and that's one of the reasons that we wanted to have you on, and I specifically wanted to have you on, is because I introduced Jake to parties at the beginning of a transaction regularly, and he's along the way through a number of some pretty difficult ones. We've had a number where Jake's actually been brought in to salvage a situation, something where we had one where financing dropped out on the day of closing. I think somebody just called you this week about a financing headache, but I think we might be getting through that. But that's one of the reasons that I think that it's valuable to have you on to record the dialogue about this heightened level of service, this type of relationship building and maintaining that is, I would imagine, bringing you some success. I mean, you're in a position where you have to manage your own finances because you're commission based,
right? And
that in itself, I mean, you have to be busy. we all know in this room that if you're not busy, you're not moving, and it's very similar to the shark philosophy, where you're not swimming, you're dying.
Right.
Have you found that things are getting gradually crazier? Things are softening up? I mean, you're in a sector of the market that we don't see on a daily basis, where there's conversations around the interest rates that are fluctuating and just seeming to climb higher.
Yes.
What are your thoughts and feelings? What's going on?
So it's definitely, there's actually a Fed meeting today.
Yep.
Where I think the kind of general consensus is that they're potentially going to raise another 0.25%. But, it's always a 50-50 whether they're going to raise them or, I mean, I guess they could keep it the same like they did at the last meeting. But I certainly don't think they're going to cut rates.
No.
So we're in a position where if they do raise it another 0.25%, we'll just have to kind of see what the fallout of that is in the rate market. It could increase rates. It could already be priced in if that's what the kind of high-level institutional investors have already kind of speculated is to happen. So we'll see this afternoon if rates are going to continue increasing again, or
the 25th when we're recording this. Yeah,
right.
When you read the news or you go online and read the news in the morning, it's a definite quarter. Everybody says it's a 0.25%. Right. They seem to know,
right?
Even before the meeting. I don't know
exactly, and they might have their kind of their friends in the know that they're getting little tidbits from and everything. But
and I'm amazed that since this all went from 3.5 to 7.5, the book of business that we're still doing, it's just incredible.
Rob and I were talking about it this morning. It really has not pumped the brakes on spending, on borrowing at all. I mean, people are still going full steam ahead with their purchases, and it really, it definitely has. I've had buyers of my own who, unfortunately, they qualified for $250 or so a couple years ago when rates were at 3%, and with rates doubling from that point, they no longer qualify for $250, and they've kind of been priced out of the market. But there's still plenty of folks out there who are, still looking to buy at a high 6, low 7% interest rate as prices are continuing to increase still. So,
we're seeing a little bit more of it because we're also listing a lot of properties right now. We've been in a very fortunate fast lane with listings and properties that we're representing the sellers on, and that has also resulted in us seeing a lot of different financing perspectives, a lot of different offer structures, people that are working to be competitive, and what the definition of competitive in the current market is. I do think while we've lost a number of people in the shuffle these last couple months, 2023, I don't think that the buyer pool has at all diminished. No. Honestly, I don't think that that you could say it's lessened, but you can't say that it's diminished. Right. We have listings that are active from day one, and we have the ones that also are taking a little bit of time. What are your feelings as far as the mentality of buyers? Are they frazzled, frustrated? Are people still pretty hopeful? I mean, what's the demeanor that you're seeing with most parties you're conversing with?
I think it depends on kind of what stage the buyer is at. If it's someone who's been searching for the last 2 years and just basically watched their interest rate go from 4 to 5 to 6 to 7%, those buyers are definitely pretty discouraged. But for buyers that are kind of jumping into it now at this point, who, they were never quoted a rate in the 3s or 4s or 5s. So what they know is that rates are in the 6s and 7s. And so it's not as shocking to them in a lot of cases. The payments, when I quote out monthly, monthly payment's going to be for a $300,000 house with, 5 or 10 or 20% down, people are definitely a little bit surprised by what the cost is.
It's a shocking figure.
It is. I mean,
especially when you cross the 300,000 mark. I was just doing this exercise last night with a friend of mine who might be moving north. And we were looking at, houses down in like Milford, New Hampshire, which is a pretty popular area on the Massachusetts border, around like the Manchester, Nashua, Concord belt. And the payment was something like $2,400 a month just for the real estate with 5% down, which was about $20,000. I mean, that is a daunting figure for anybody that's looking to purchase something. But it's not impossible. That's the thing that's somewhat surprising is there are still a lot of people that are able to step up to the plate and say, I can accomplish that.
Right.
I can definitely do that. I could do that and then some. We see people, that are very well qualified in this line of work.
And when you compare it to the rents that are being charged right now too, if you're looking for a, 1 bedroom, 1 bath, you might be able to find something in the $1,500 a month range or so, maybe $1,800. But if you're looking for 2 or 3 bedroom, if you have a small family,
of course,
rents are well above $2,000 at this point. So if the total mortgage payment, including the taxes and insurance, is in the mid 2000s versus rent being in the mid 2000s, people are still looking at those side by side and saying, I'd rather own. And even if the payment's a couple $100 more a month, they would rather get the equity in the home than just be throwing away $2,200, $2,300 a month every month.
I think that reflects in what we're seeing with buyers coming in from out of the area. A good analogy is my son rents down in Bedford, New York, $6,000 a month.
Oh my gosh!
For a 3-bedroom Cape.
Wow.
Okay. So obviously people like that are thinking, geez, I could come to Vermont and buy.
Within a pretty gross range.
Right. You could get a lot of house for even $3,000 or $4,000
exactly.
a month.
Yeah.
And you could get land too, and
absolutely.
be a part of a great community.
Yeah, and he was up this weekend, and I said, what are you thinking? He said, I'm thinking maybe I should come up and buy something in, he's looking at Barnard, Peacham, a nice area, where he would have a second home, and then eventually he would move up this way. So
right. I have been seeing a lot of people inquire about purchasing with that exact same structure, buying a second home, utilizing it as a second home for a little while, and then making that transition to where it might take them some time to find a new job that's fully remote or to find employment here in Vermont. But they are interested definitely in acquiring the real estate now and then figuring it out from there.
And didn't you just have someone look at a property that was in the $1 million range who works from home?
Yeah, a young gentleman that would basically just have a pretty high-end bachelor pad that he'd convert a number of rooms. You know the one. It's the log home we have out in Warren.
Yes. Yeah.
That might be by the time that this airs be under contract, depending on how things go. But that's we are still seeing that sector. There was a young man in Groton that worked for Amazon that bought a house that you have a pretty funny set of stories around.
Well, just that he was happy to sit down and tell us what he was making. And I think when we initially met, he just up and said, my income is about $30,000 a week with Amazon. I said,
my gosh.
Oh, goodness. And the house he was looking at was, I think, $1.2 million, so we knew there was no problem there. And we had about $200,000 worth of woodworking equipment that was separate. And I wondered what I was going to do with all that equipment. And he said, I'll take it. I'll just write your check for it. So,
oh, my goodness.
Amazing.
It's crazy to see a lot of the wealth that's still, I have a lot of clients ask me, like, where's all this cash coming from? Like, how are people buying?
Yeah. It's new wealth, too.
Right.
A lot,
Right.
Yeah, we see a lot of wealth in the 30 to 50 range right now. I mean, there's a number of people that have been very smart with their money as well, which I think is also important. That's something that I wanted to touch on with you, Jake. Being in the finance sector, I know you and I have had a number of conversations around personal finance, things that we do to build equity or just to make the right decisions with our money. And Dale, that's something that you and I talk about regularly as far as, development and establishing roots. As somebody who has eyes on the sector, I mean, what are your personal beliefs? What do you feel is something that's, a good course of action? Is it all high yield savings right now? Is it the investment or the stock market? What's kind of hitting your vibe right now?
So I think like a responsible strategy is like, I'm W-2. I know you guys as realtors, you're self-employed.
Yeah, we're full 1099s.
So it's a different kind of structure. But for me, I try to put as much money into my 401k as possible, just because that's like the nest egg. That's the safe retirement money. I try to push as much of my earnings into that first so that it's all just taken care of. And then I have whatever's left, and then I use that for car payments, student loans, the whole 9 yards. But I think trying to reduce debt as much as possible right now is key. Mortgage debt is a little different because there's the utility of it's your place to live. It's kind of a necessity in life. So
you're building equity and
right. So and you can always, not always, but you can generally sell the asset to pay off the debt in the future. Car loans can be different because if you take out a crazy big car loan, and then the value of the car changes that, or, you crash it or something like that, you don't always have the asset to get out of the debt. So I think paying down debts as much as possible and being responsible about not taking on too much debt is certainly a huge step as far as young people kind of trying to build wealth and utilize their capital. If you get rid of all the debt first or as much of it as possible, then I think you put yourself in a better position to qualify for that home purchase. I think you can kind of chip away at things and still be putting money aside in a high yield savings account so that you can kind of build up that savings buffer. But I certainly prioritize retirement spending first, then liquid savings, paying off debts and things like that.
Mhm.
And then whatever's left over, then, you know, if I want to go out for dinner or something like that.
Sure.
Once in
Wanna
a
play
while.
golf with
Right.
Mike and I.
Right. Go play golf or something. That's the fun spending money is what's left over at the
Sure.
end. A lot of people do it kind of backwards where they're like,
Yeah.
oh, I need to spend on this and that and that. And then there's
Concert
nothing
tickets.
left. Right.
I keep ranting it, Darren. There will be a slowdown. I've been through several of them, and boy, get your debt down as low as you can. You know.
Definitely. Because there's so many ways for people with credit card debt these days with, you know, how easy it is to get a car loan. It's not like with a mortgage, we look at people's income, we look at their credit, we look at their ability to pay back the loan over the long term. With a car loan, I mean, a lot of times they're just trying to move that car off the lot.
Yeah.
So they'll give you whatever loan they need to give you, even if the terms aren't great, even if they don't know anything about your income or your ability to actually afford that payment. I see so many car payments that are $700, $800, $900 a month, or like I've seen Tesla payments that are like $1,300 a month. It's like, it's a lot.
Yeah, no, there is a high end for the vehicle payment, but it is an equity game, very similar to real estate, where you know the vehicle is a daily thing you're driving around, and also you know in our business especially, we've had a number of conversations off mic about the appearance as a professional. When you pull in the yard somewhere, when you end up at a meeting place, or if you have to say cart people around in this business, that was something that I didn't get to see much of, because I started when it was the pandemic, so we weren't allowed to touch or be in the same vehicle as people. Not that we should be touching people now, but but I think that it's definitely sage advice to pay down your debts, especially with the student loan resurgence that's about to happen.
Yes.
That's probably, I mean, I've mentioned this to you. I've brought it up in a couple different meetings where we've been involved in conversations with financial professionals. What are your thoughts on that impending occurrence? I mean, student loans are going to be kicking up it's July 25th now. We're talking about a couple months, if not a couple weeks.
So that's something we're keeping a keen eye on as far as qualifying folks as we approach that October 1st, September 1st kind of time frame. Because as of right now, for the last 2-3 years through COVID, the student loans have been in deferment. So they just, on the credit report, they show 0 for the monthly payment in like 99% of cases.
Sure.
Any of the government student loans are just a 0 monthly payment. So how underwriters have been looking at those is they still make us throw in a placeholder just to kind of have something factored in. But it's usually not a very conservative amount. It's like 1% of the balance or 0.5% even. So, for example, for mine, I have like 16,000 student loans left. If I were to use 1%, that would be a $160 a month placeholder.
Sure.
My actual estimated monthly payment is like $250.
So you're off by a fair shake.
If I had qualified somebody with the $160 a month payment, and then come, September or October, whenever it changes on the credit report, $100 a month is a big deal in some cases if people are cutting it close.
Of course.
So that could literally bump them from qualifying to not qualifying. Or if you go from 0.5%, if I was using a program that would allow 0.5%, my placeholder is only $80. And the jump from 80 to 250 would be huge.
Right.
So we're definitely prepping a lot of our buyers for that kind of change and really trying to factor that in on the front end so we don't get deals in the pipeline that have that come up last minute and kind of throw things off.
Yeah, I think this is a perfect segue into the deals that fall apart, because they fall apart for so many reasons. They fall apart for no reason sometimes. I mean, Dale, you obviously have a plethora of stories on this topic of deals that have fallen apart in the final minutes. But I mean, what's your top of mind favorite financing story?
Oh gosh, I just thought of something. Are you still doing the low doc loans, though, just to go back to something you said?
No, not low. Everything is still super heavily documented. We have ways of kind of streamlining things. I collect a lot of the docs up front. Anything income related, anything debt related, because, or if we're super tight on like their funds to close, I'll collect the bank statements, make sure we have gifts documented as early as possible. But really there's not any options out there that I'm aware of for, no income doc or no asset doc type loans. There are some investment products out there, investor that are just like bank statement loans where you don't really have to document your personal income because you're using the cash flow from the property to, show a debt service ratio. But for general consumer mortgage loans, they're still very heavily documented, and lots of work goes into making sure that these folks can qualify and make that payment.
Well, that's keeping 2008 from happening again.
Right.
Really the employment verification, the income verification, all the hurdles that they're being put through. I know Jake and I had one where the financing pulled out on the last day, the day of the closing. And you were able to scramble and put that one together. I mean, looking backwards, do you remember specifics about that happenstance? Obviously, when we're referring to properties or transactions, we're speaking to like townships and generalities rather than specific parties.
I want to say, wasn't that one because the lender that they were with couldn't get an appraisal?
No, they missed a foreclosure. Oh. That was the one where they missed a foreclosure before the closing.
Yes.
And so then it put the financing in jeopardy the day of the closing. So then you were brought in at that point to then provide financing with the full picture.
Right.
From that point, I believe that was 3 or 4 weeks that we closed that one after you picked that up. I mean, that's pretty impressive, I must say. I mean, the ability to close something in a month. How does that happen? Is it really because of the pieces already kind of being in line that you're able to pick them up and kind of transpose them into a new loan?
So in a case like that, I've definitely, a lot of it is just that first 24 to 48 hour period is so crucial. So I, do an in-depth, thorough review of the borrower's application. I've seen probably at least 500, if not close to 1,000 applications at this point. So you kind of know where to look, what the hurdles are, what are the things that could come up. In that case, we already knew what the issue was the foreclosure piece. And so then it's just a matter of identifying the loan program that we can use to kind of get around that hurdle. And then it's just hammering the documentation. Like sometimes, like I tell my clients sometimes, like, look, I'm going to be all over your case for like probably 24 to 48 hours because we really need all this documentation.
We need to get this done
today. So it's like, I know you're probably busy working, maybe they have a 9 to 5 or something, but I'm like, this is your house that you're talking about. So spend a few hours tonight after dinner, pull together all the documents I'm asking for, get them over to me, and then I can jump in and do my piece, get it right over to the underwriter, get docs signed, the whole 9 yards. And then we work with, we're blessed to have a lot of partners that we've created relationships with where if we need a favor, like a super quick underwrite, we can ask for that.
Yep.
And our underwriters we're just super, super lucky to have the partners that we have.
That's awesome. And I think that a great takeaway from that is the, being expeditious with documents that are requested. I mean, in any instance, it's not a bad thing.
Right.
To give, and we see that a lot with contracts, people that drag their feet, signing various forms and documents.
Yep.
I mean, that's been a real challenge lately too, especially anybody that doesn't have access to technology. We've had a lot of what we call the snail mail transactions or instances where, we're basically dropping something in the USPS and getting a tracking number and
hoping for the best.
Adios, muchachos.
I hope it gets there.
Or phone me when you land in Mexico City. As far as, things that are happening, work stories, I mean, do you have something that you're really proud of right now, something that you've been kind of, like a real hard one that you got over the finish line, or anything that's kind of funny or crazy? I think that's something valuable that Dale and I are always working on, is our collection of stories. So that's kind of what this is for, in a way, a medium to collect stories.
Definitely. I mean, there's in our business, the rare deal is the deal that goes off without a hitch, where there's no problem at all.
Which is kind of sad in a way.
It's like there are so many. What I tell clients, just to kind of prep them so that their expectations are set out of the gate, is that, the lender is looking at you specifically, your personal finances, but they're also looking at the house. So even if the person has the perfect financial background and profile and everything, there could be something wrong with the house. There could be something that comes up on the title. The appraisal could go wrong, or there could be something that comes up on inspections. So if it's not one thing, it's another. If the house is perfect, then maybe the borrower has something from their past that comes up halfway through the process. Or I've had people try to switch jobs halfway through, and depending on how that, the timing of the job switch and things, we can sometimes make that work if they're super quick, if they already have an offer in hand, that kind of thing. But I mean, there's so many places in a deal for something to go wrong that, naturally you can check, 9 out of the 10 boxes, but if you can't check all 10 of them, that's going to cause some problems.
Has there been something specific in the line of financing that is getting in the way of deals, like a quality of a home, an issue in a home that people are maybe glazing over that's kind of coming up constantly? I know we've been, and this is a topic that Dale loves to rib me for, people leaving things behind in properties has been a big problem lately.
Really?
Moving stuff out of properties, couches, various pieces of furniture, equipment, tools, trash. I mean, we have multiple projects that are in the wings because of cleanouts at this point in time. Are you seeing any of the ramifications of that on the finance side? I don't imagine you are.
No, I don't usually get those calls.
Sure. I need you to move that couch. You're lucky. We should move into finance, Dale.
Right. After the closing, I don't get many calls about, like, I've had clients who, a tree falls on their house, a month or two after
insurance
closing.
claim.
Right. So like they'll call me in some cases just because they're like, I don't really maybe remember who my insurance company was. Sure. Can you send me the binder so I can, contact whoever I need to call?
Right.
So in cases like that, I've been kind of brought back into the fold, but the stuff like the stuff being left behind, or I did hear about, there was like someone was supposed to get a new fridge or something like that, I think, on one of them, and the fridge wasn't there on the closing day, so that caused all kinds of issues and stuff. But I don't hear those stories as often. My stories are all just like in the line of fire, like in the course of the deal.
Yeah, right.
Because that's what is mostly where, if something goes wrong, it's going to come back on me.
we seem to see, over the years, I mean, we've done this a million times, but the hoarders now, there more and more people are hoarding things. I've never seen anything quite like it.
Definitely.
Yeah, I think it comes from also the availability of things nowadays. I mean, there's just so much stuff.
Yeah.
I mean, nonsense items, things that serve no purpose, things that are just meant to have some type of significance, but as soon as they stop having that significance, it's just matter.
They go to Dollar General 3 times a week,
Right. Well, it happens. Yeah. And we see a lot of that. I think that's, I don't think we're trying to accomplish anything with this podcast, but I do hope that anybody that has a house full of stuff hears that we realtors are happy to help you, but we'd also like some help on the back end. We have people we can send your way.
I had one many, many years ago where the walkthrough, there was an old stand-up piano that was left that should not have been left, and the buyer said, there's no way. Well, to find a piano mover in a short period of time, and I did, and it cost, I don't know, $400, I think, to get it out of there that day of the closing.
Wow.
And the other realtor who was not there at the time, I said we'd split it. Well, that realtor was some upset when she found out that she had to pay half of that fee to move that piano. But I said if we hadn't moved it, we would not have had a closing.
Right.
Yeah.
Right.
Which is where the mantra of, we can't let couches stand in front of closings kind of comes from. But, pianos and organs and things. Yeah. We have a property that has some of those in it that luckily, it is always a fascinating thing to see what people are into or happy with. We had a guy last night that was infatuated with a basement in an old property because it's just like this big, it's the Fulton property in Bath, the Bath Stonehouse. It has a great basement. It's this poured concrete basement and these long hallways, and like you could do what you want with it. And it was really funny to see somebody really jazzed about a basement in an old house.
It's amazing.
And he actually described it as badass. And I was like, that is really funny when you're talking about like a basement to be like, that's, a really cool thing. I know we've had a few that were tough properties. We had one in particular that was being powered by a generator.
Yes.
When it closed. And I don't know how that got through. Can we look back on that a little bit? I'm very curious to find, so when that was going through, because it was appraised, it went through the full financial racket, as I'll call it, kind of off the cuff. How did that make it through the rungs without getting hung up?
So was that the one where the utilities had been shut
Yes.
off? So I think in that case, the lender tends to defer to what the appraiser says. You know, the appraiser is the one with the boots on the ground at the property. And so in that case, I can't remember off the top of my head exactly what happened, but I think we just documented for the underwriter that due to circumstances that were not by any means the fault of the buyer who's going to be taking over the house, the utilities had been shut off. They would be turned back on as soon as the closing was, you know, had completed.
New ownership.
And the buyer had taken ownership. I think there was a debt, like a past due bill for the electrical. So we had to tell them that was all going to be paid off. It was not going to be anything that was going to, you know, loom over the buyer's head after closing.
Right. No lien.
Right. So as long as we were able to document all of that, that's what, you know, kind of set the deal up for success. Cause you had brought that to my attention, like right out of the gate.
Yeah. Well, it was a condition that we didn't have any way around. Right. I mean, the utility company having it be shut off, and then I mean, luckily we were able to have some temporary utility in place, but I mean, that's far from standard. But that ended up having an escrow agreement that fell apart after the fact too. That didn't just have the issue of the electric. There's been a number of transactions that have just had a lot to them, a lot of just stuff,
a lot of layers,
a lot of meat on those bones, right? But I know that as far as the financing sector goes, I mean, I would imagine you're optimistic. We're optimistic looking into 2024, for example. I mean, I would imagine looking to the future that you're optimistic for your line of work, what you're going to be doing, who you're going to be doing it with.
Absolutely. I think this year turned out better than I thought it would. I kind of had a feeling that with the inventory being so low, it was going to be a tough year for us. Like on the financing side, a portion of our business is always refinances as opposed to home purchase deals. But this year, I mean, the refinances have been non-existent with rates being so high. So the fact that we've just been able to continue to bring in business that's on the purchase side, you know, next year, if there happens to be a 0.5% reduction in interest rates or even a full % reduction, that would open up the ability for us to reach back out to many of our clients from the last couple of years and refinance a bunch of people, help a bunch of people save a lot of money. And so that is something that we're kind of, you know, I'm not like sitting here, you know, waiting for that to happen because that's the only way I'm going to make any money. But it's like, it would be, you know, it's something that I know will come around at some point. Rates are very cyclical. They go up and down and up and down. So it's something to kind of look forward to that, you know, even if the purchase market still isn't super strong next year, there might be an opportunity for a lot of folks to refinance and save some money and hopefully get into something below a 6%. But
absolutely.
Are you doing many of the no appraisal loans?
Yes. So the appraisal waivers have been huge. It's tough because there's not as many of them in Vermont as there are in New Hampshire. There's a lot more appraisal data available in New Hampshire than Vermont. There's just a higher number of units in the New Hampshire side than in Vermont. And a lot of cash deals in Vermont because there's a lot of second home purchases and things like that. So the more appraisal data there is, the higher the chances that a specific property will be eligible for a waiver.
Right.
Also, the trend that we're seeing is that if a property has been financed by Fannie Mae and Freddie Mac before, they already have appraisal data specific to that property. So that helps them to kind of extrapolate what the potential market value of it could currently be. If they have an appraisal that had been done on a refinance 2 years ago, that property might be much more eligible for a waiver as long as the borrower has a larger down payment. They have the data to say, you know what, we think the value is good, so we're not going to require an appraisal. So we have, I think I probably have like 3 or 4 in the pipeline right now that have waivers.
That's good.
So, you know, it's not a super high percentage. The borrower has to be, you know, qualified enough to have at least a 20% down payment, sometimes more. Generally, you have a better chance of getting one if it's a primary residence as opposed to a second home or an investment property. But so for those buyers who are looking for a new primary residence with 20% down, they have a pretty good chance, I would say.
Interesting.
And to speak from our perspective, that's the next best thing to cash is a financed offer with an appraisal waiver.
Right.
Because of the fact that cash really has a leg above all else because it doesn't have the appraisal element naturally because there's nobody that's coming around wagging their finger at people who just willingly want to spend their cash.
Right.
So that's something that's definitely, I mean, to anybody that's not in the trade that's listening, I would say, anything with an appraisal waiver is a strong offer, arguably one of the strongest offers you can make.
Exactly.
Are you hearing from a lot of buyers that they're waiving inspections, that they're changing offer contents to be more favorable towards the seller to win things in a competitive atmosphere?
I do see more and more of my buyers waiving the inspections. I always try to be careful, because I kind of look at that as the kind of expertise of the realtor to help them craft that offer and, to be able to educate them on what it means to waive the inspections, or oftentimes it'll be a situation where the buyer's agent is able to go to the seller's agent. Maybe the sellers had an inspection done a couple years ago, and so they're able to get access to that report for the buyer, and so that's something that makes the buyer more comfortable with waiving the inspection contingency. Sure. But that definitely, I do see it happening more and more, because unfortunately, just with how competitive this market is, if you're a seller and you're fielding 5 or 6 or 7 offers, you're looking at like a spreadsheet trying to compare and figure out which one's the best. It's like, those are some pretty easy boxes to check to say, oh, these people are going to make us get a full battery of every inspection under the sun, each of which has a chance for them to either reduce the price or walk away from the deal entirely, or the one that has none of those boxes checked.
We'll just take it as it
We'll just skip right over that step. So if I was a seller, I would definitely be looking for an offer that had the least amount of contingencies possible.
Oh, of course. Yeah. That's where the various sides of representation come in the mix. I mean, in your profession, you're not working with sellers, obviously. I mean, it's really that refi capacity where you end up with somebody who's a current homeowner that's not looking to acquire anything else. You've seen some pretty crazy instances of, competitive happenstances over the last 24 to 36 months. But then, before this COVID market, inspections being waived was somewhat not done. Is that correct?
No, rarely done. And I think that may come back to bite some people.
Definitely.
Oh, absolutely it will. Anybody that's missed a material defect or a significant item. Can you speak looking backwards from the current market into the market before? Because Jake and I both have 3 years in our businesses. So you've obviously seen a market that's drastically different from what we've been working within. Would you have any points to make about what it used to be compared to what it's become now? I know it's crazy now. That's a synopsis that we've agreed upon regularly.
Yeah. That's I guess that's how to term it. It's just a crazy, crazy market, and for me, with all the experience I have, I'm still learning as I go.
Right. And
I'm learning from Darren, who I should be teaching him, but
you have taught me an incredible.
He's actually showing me the way on some of these things. No, I don't know. I just have always loved the business, and I love being creative, and I love helping people, and I'll just take it down whatever road it goes, and I'll make it happen.
Absolutely.
Yeah. Well, and I think what we're seeing too is that the reason it's so crazy is that there's so much volume that we're seeing every happenstance that's kind of out there. We're, our random generator is coughing up, something new every day because of how many people that we're just interacting with on a daily basis and all the properties we're listing and selling and the buyers we're working with.
Right.
I think we just, we learned to say, make sure you have your insurance binder, because not lately, but I've had, I think, 1 or 2 homes burned down the day before closing.
Wow.
Yeah, those are can you speak to those happenstances? Those are crazy stories.
Well, I can remember the one which was out in Corinth, and the buyers were headed east with a truck loaded with all their furnishings to move into the home, and the seller's children stayed in the home the night before the closing, and they decided to have a party. And there was a generator down in the basement, and the one son went down and poured gasoline into the generator in the basement, and it ignited and took the home just to ashes. And so I had a hell of a time finding these people, and finally located them somewhere along the way and said, we got a problem here. And it just happened there was a house down the road that the gentleman who owned it was very willing to rent to us for a time being. And actually, it ended up that the people rented it, and I think ended up purchasing it after that. But
wow!
So those are one of those. The gray hair that I have now is a lot of it was due to that situation.
Yeah, house burning down is kind of hard to get past. You can't really salvage the burned house.
No.
Well, Jake, do you have any parting words? Anything that you'd like to kind of depart on? We're coming up on our time, and
Holy smokes!
I know
that went by quickly.
Yeah, time flies when you're having fun. Well, I think just to kind of synopsize, I mean, I've been so fortunate to call you a friend, to get to work with you in a number of capacities, and I'm so lucky that that's also the relationship that I have with Dale. And I think that that's the way that professionals build and maintain spheres, is by nurturing and fostering these relationships. So of course it's a natural fit to have you come on and share some stories and give a little history, because then next time we have you on, we can just tell stories.
That's a very interesting, because I think in the business today, all of us seem to latch on to people who we can be tight with, that are going to help us through things. And Darren's very good at doing that. We've created a very good network of people around us that are helpful.
Definitely. I think it's so key to have that team, because every deal is so high stakes right now, with there being such a limited amount of inventory. Some folks put in 5 or 10 offers before they finally get one under contract. So it's like by the time that contract comes together, it's like feels like life or death in some cases, that we have to get it closed. We have to figure out a way. So having the team members there where we can rely on each other in any. Like, I know that when we're working together, no matter what happens, we can close any deal that happens, whether something goes wrong or not. Because I know that we can rely on each other.
And I know Darren has said he could call you on a Sunday afternoon. We couldn't do that with a banker 20 years ago. There's no freaking way.
Yeah, the office line would just ring and ring. There's and that's
a message.
I mean, we are in the modern day, so communication is readily available in basically every situation. And that's something that I take a lot of pride in too, is, being quick to respond, being quick to pace. We had a really fun moment, Dale, Jake and I, the other day. He sent me a request for a water test that I had the results for already, and I just sent them right along. And it was a very fun, ball in the net type moment where it was like, yeah, man, I got that. Yeah. Boom.
I was like, crap, I forgot to tell Darren that he had to get the water test done. And he was like, dude, I already got it. It's already
right here. And it's clean.
Yep.
Really one of his strong suits is being able to do that. Yeah. I said something to him today or yesterday, and he said, it's all handled. I've done it. Taken care of it. Yeah.
Well, already checked the box.
Having a self-prescribed case of ADHD has been somewhat beneficial in this business because of the need to be able to bounce from thing to thing to thing. Right. It's like me keeping an eye on this camera to my left every 15 minutes, because I know that's when it kicks off.
Yep.
Makes it very hard for me to keep up.
Well, that's why we're recording things now, so Dale can listen back and pay attention. Well, I think that was a great synopsis. Jake, thanks for coming on today, buddy. Yeah. And we're going to talk to you again a little bit later.
Thanks so much. Yeah.
Thank you.
Yeah, that's right. You're coming back, right?
Absolutely.
Thank you.
Thank you, Jake.
Thank you.
Cool. We're off mic. Mic's outside. Isn't that fun? Yes.
That is a lot of that. Literally went by so quick.
Yeah.
I was like, oh my gosh.
I'm very pleased with.
I was wondering what we were going to use for fillers.
Right. Right. Yeah. Like, what do we do when we run out of questions and stuff? But it just it rolled from one thing to the next.
No, it's great.
We're talking to Mike about the same stuff.